Obviously, yesterday, BHP put out their full year FY17 result. Market a little bit ahead of where it actually came out in terms of earnings, but on EPS basis. But the cash flow was really strong, and that's what I look at. And obviously, we're in it to make money, not to chalk up paper wins. So, free cash flow almost $3 billion ahead of consensus, but left me with the impression it was a really good result. In terms of the big news that you would have seen, obviously splashed across every paper, they've come out saying that they've decided to reclassify their shale business as non-core and divest those assets. And we wait for clarity on how they'll actually do that. Obviously, they're going to start to test the market, but their preference seems to be with the trade sale, which is in our view also the best outcome. So ultimately, the way that'll impact FY18, if it's successful in selling these assets, is you'll get proceeds of somewhere in the range of US $7 to $10 billion. That's in addition to the free cash flow we're forecasting of another $10 billion, leaving BHP potentially with disposable cash flow at the end of the year of in excess of $17 to $20 billion. So, I mean, that's certainly a lot of cash, way more than what their net debt balance is, which is just below $17 billion now, which could put them back into a net cash position within 12 months, which is pretty astronomical. But the BHP has said that their target level of debt is net debt is between 10 and 15 billion. So it really, even after investment, that level of disposable cash flow, the only other place it can go is either acquisitions, which they're obviously treading very carefully and really not seeing any great value in the market, as I said many times, or increase capital returns. So they did increase the dividend, not as much as we were hoping, but certainly the yield is on above 5% and heading north. And that really looks like there's nothing that will hold that back now going forward. So big turnaround in coal profitability as well, contributing over $3 billion of EBIT. That was fantastic. The shale sale, which is coming up, and then investment back into conventional oil in the Gulf of Mexico, as well as the Spence Hypogene project, which is copper in Chile, which is a very large, long-life asset as well. It just looks like BHP is making all the right moves, and that's obviously been aided by the tough downturn we've been through, which has really hardened management capabilities and experience, as well as the effective activism we've seen out of groups like Elliott. So all in all, we've got an increased price target of $29.10. More than happy to keep our ad recommendation and just think that, the turning in cycle, big cash flow and big returns, it gets pretty simple and more than happy to keep buying the stock.